Hello traders and welcome to another video review. Today is Friday, April 5th, 2024. Let's find out what's going on the markets today. We already know that in every first Friday of the month there is a Nonfarm Payrolls Friday, and the same Friday is today. Non-farm payrolls and average hourly earnings together with the participation rate are expected to be released at 2:30. But before we will have the non-farm payrolls, there is still some data scheduled for release. One of them were already released, like data from the UK. Halifax house price index disappoints the participants with the actual reading of -1%. Forecast was 0.3, previous was 0.3, so pretty bad data from the housing market in UK. German factory orders dropped to 0.2%. Our forecast was 0.6%. The previous reading was -11, so there is a slight increase, but not as good as expected. Consumer climate in Switzerland will be released at 9 o'clock. Then we have the construction PMI from the UK scheduled for release at 10:30, and at 11 o'clock we got the retail sales from the Eurozone. And then everything is about the non-farm payrolls. As I said, average hourly earnings scheduled for is at 2:30. The hourly earnings are expected to increase from 0.1 to 0.3, and the non-farm payrolls are expected to decrease 275,000 jobs down to 212,000 jobs. Unemployment rate is supposed to stay the same at 3.9%. And of course, except of the US jobs market data, we got the Canadian data, employment change, unemployment rate, and IV PMI. At the end of the day, we got the data from the oil traders. US Baker Hughes oil recount and total recount is scheduled for release at 7 o'clock. So NFP Friday today. Let's take a look at the euro dollar, as this pair will be 100% affected. Euro dollar 4-hour chart is showing us very nice bearish engulfing pattern at the level of let me just move my line so I can see the high is at 1.0877, and this is exactly where the orange trend line is. We indicated this orange trend line a long time ago. Now we have the first, second, third reaction on this trend line, bearish engulfing into the extremely overbought territory, extremely overbought levels. Down we go, currently 55 points on the RSI, testing the 100 periods moving average. So it all looks as expected. Next target just before the NFP is located at 1.0796, 1.0808, right? So there is 50 periods moving average as well. So please expect this zone to provide some sort of the very nice support for the boost. That's the USD ahead of the NFP payrolls. Of course, any data that are better for the US dollar will most likely cause a sell-off in the euro dollar, so we can easily break below this zone here and go down towards 1.0726. Any data that will be worse than expected would likely support the euro and make the euro go higher. Now, because we got some data from the UK, let's find out what is British pound doing. And as you can see on cable, we got the situation where the market was rejected after this shooting star pin bearish candle was made on the 4-hour chart with a top at 1.2682. We are trading below 100 periods moving average, coming close to the technical support 1.26.4, 1.2613. So we can see a test of this level as well. Please notice that we reversed towards the level of 50 already. Now RSI is 48 points only, so any breakout below this support zone would mean that we enter the bearish territory. Negative sentiment would prevail, and the bears might push this market lower towards the lows, the weekly lows, the swing lows at 1.2538. So very nice reversal from the let's say pin bar after the pin bar candlestick pattern was made on the British pound. What's happened on the S&P 500? This happens. For our chart is showing us one big candle down from 5,252 to 5,146. It's like a 2% drop or something like this, but we closed below 50, 100 periods moving average. So on a larger scale, this is the biggest drop in month. Oh, no, in months. The last, since the low at the 1st of the November last year, right? So this is definitely the biggest drop, biggest one-day drop, and we didn't even hit the extremely oversold conditions yet. So where is the next target? It's really hard to say where is the next target, because with this steady uptrend, it looks like the next eventually interesting levels for the bulls 5,118, 5,100, 5,091, and eventually there is very nice level here, 5,056, 5,050. So those levels are the special technical supports for the bulls. Please notice the fact that this one day sell-off doesn't actually mean that the trend is terminated. It might be a pullback, it might be some sort of the correction. Nevertheless, the trend is still up on S&P 500. What needs to be done in order to this trend to be violated? Well, it's very simple. We need to go down 20%. So let me just show you guys roughly how much it is. I think my price range tool is roughly here. So okay, 20% down, of course, not up. So from the top, roughly around here, 20% is somewhere here. There you go. So we need to go below 4,000, let's say 4,230. Okay, and that's a 20% drop in terms of the percentage, but we still can use, I guess, our Fibonacci tool, and the Fibonacci tool can show us the retracement. So from the let me just use the magnet from the lows of the November, the beginning of the November, right? So we need to do it the opposite way. So from the highs, roughly around here, to the lows of the November. That's the multi-month Fibonacci. 26% is located at roughly 5,000. 38% is located roughly around 4,824, and 50% is located at 4,689. So this is roughly that area here. So we are far away from even the minimum retracement here, but please notice the fact that this is a multi-month uptrend, so it might take quite some time to get there if we continue to move down. All right, so the outlook is still bullish unless we will definitely close somewhere below the first major technical support, 5,050. Last but not least, the Bitcoin. What is Bitcoin doing? As you can see, not much. The Bitcoin is still in a waiting mode. We all wait for the halving. Right now we're oscillating from the extremely overbought conditions down to the extremely oversold conditions. Now we go up towards the technical resistance, and then down we go up for the pullback, and so on and so on. It looks like this kind of a scheme would likely be continued for quite some time right now. So please be prepared for the Bitcoin to be hovering around $68,000 for quite some time, maybe even today and over the weekend. The outlook is still bullish. The uptrend is still in progress. So after the halving, the more decisive movement should be made. The expectations are that after the halving, Bitcoin will go up, will break above the all-time high at 73,559 and will hit the next target for bulls at $75,000. It might not be the last target for this year for the Bitcoin. We might see a way bigger rally after the successful halving of the Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.